Ladies and gentlemen, this is your boy Kenny Coins with Marathon Money Inside the Ticker. And you guys, I'm back after harassing me for the last 3-4 weeks. When is Wes coming back on the show? He's here. And the last time he came on the show was back in March, when he was at $4 a share. And now his company's at 35.96 with a tremendous 500% gain in the last 6 months. Wes, I think it's best if I let you take it from here. Tell everybody what's been going on the last 6 months. I know it got to feel great to be at this position right now.
Kenny, I appreciate you having me back. So thanks for that. And I really appreciate you having me on the first time back in March. So from our conversation March until now, we've made a lot of progress, but it's great to come on where we've done a lot of the work already. When you and I spoke in March, I think I talked about then a little bit of patience. These things take time, and so we'd started building our AI campus, our AI factory campus back in 2023. We worked through the process with a couple of hyperscalers, and then we finally landed with a big contract with CoreWeave for 2 buildings that eventually expanded to 3 buildings for that campus, total of approximately $11 billion in contracted revenue over 15 years. And that's really was a game changer for our company. But I said this internally inside of our company, we worked really hard to get there. But once we had signed that, even before we had announced it, there was a few days in between. I told everyone that this is not a time of sit back, congratulate yourself, we did it. This was a time to really press. It was going to give a lot of momentum to our company and our business, and we have a great team in place. And so while we were doing all of that everyone has seen, we're also working on other campuses because we think this market was, significantly larger. So that means more power, more building. And from when you and I last spoke until now, so not only did we sign that contract, but we've spent a lot of time on how we scale construction, how we scale operations, because we started out building a single 100 megawatt building that will turn on 10 days from now. The first one, it's the 14th. I don't know when you publish this, but this is scheduled to go live the 24th, and then be that building fully live by the end of the year. But then we have a second building right behind that'll start to go on in the first half of calendar 26, and then a third building at that campus that goes online in the early part of 27. But we've since announced another campus in Harwood, North Dakota, that will start to go online mid-26 and fully online by mid-27. And we have 700 megawatts of critical IT load under construction at the same time. But we need to go bigger, and we're negotiating for that campus. We've said we're in advanced negotiations with an investment grade hyperscaler, and so when you think investment grade hyperscaler, I always clarify this is 5 companies that are really investment grade hyperscalers that we go after, and that's Microsoft, Amazon, Google, Meta, Oracle, right? So those are the investment grade hyperscalers that we're working with. We work with CoreWeave. I think there's more to do there. That's been a great partnership to start. And then there's other companies that are coming in that we look at as well. And so we have that in Harwood. And then we have, as I mentioned on our earnings call last week, 2 separate campuses besides Ellendale, besides Harwood, 2 that we're in negotiations with other hyperscalers for those campuses. So you can just see how we're expanding, and our business has really caught a lot of momentum. We got that stamp with the first hyperscaler. We're close to getting a second really big stamp with a different investment grade hyperscaler, and it's just accelerating our business. And one of the narratives I really talked about on our earnings call, which I think is important for us, but really important for the industry, for the last 12 or 18 months, there's been just a lot of talk about power. You have power, you have contracted power. There's a lot of people who talk about power. And if you dig into this stuff, everyone talks about it differently. Maybe you have a load study in, and you're going to get power, in this amount of power over the next 5 years or the next 10 years. And we have a lot of that. that. So I mentioned that we have 4 gigawatts under active development in our power portfolio. But what we're seeing with our ability to execute, with the fact that we went and put supply chain, a locked supply chain in place, because that's a really big deal, supply chain for a lot of the key components for power and cooling, a couple of years ago. And we've really created a lot of efficiencies in our process. So what took us initially 24 months to build, now we've shrunk that down to 12 to 14 months. And we did that by lowering the number of SKUs, lowering the number of suppliers. We have a standard design that's much more flexible for the future. So we've done a lot of work since you and I talked back in March. We've hit that big milestone, which is fantastic. I think we're going to stamp a few more of those milestones. But what will really, I think evolve into here is not just, hey, what's the next big announcement for Applied? When's the next big contract? We're constantly in those negotiations. We're constantly developing new campuses, and this is turning into a platform. And what we're really creating is a category leader of not just, hey, we have power. It's not only we have power, we've been qualified, our design's been qualified with 4 hyperscalers. We're through the process. We're known. We have different kinds of conversations with hyperscalers than we had a year ago. We really are turning into a trusted partner in the ecosystem that knows how to build, that can execute, that does deliver, that does operate, and we can do it, with our design that's been vetted and the flexibility of our design. We can do it for any of these hyperscalers, plus the up and coming neo clouds. So I feel like, Kenny, that we're just we're in a really good position, and our business is just accelerating, and there's never been this amount of excitement inside of the company.
So I like that intro, and I feel like I really understand the business very well. I mean, you're actually building for the future, and you're actually starting to see the results in real time. And my first question comes into mind with everything this administration is doing with AI. And that was one of our conversations that we had in the beginning of this year, based on how AI plays out, data centers plays out, like basically what the administration is doing. And now some of it have really evolved to where there's contracts being signed by our government to really push AI data centers forward and stuff like that. So how do you think the next 3 years is going to play out for a company like Applied Digital that's kind of leading the race?
So for us, when I look at the next 3 years, and I do talk about the next 3 years, I think, in this, so in the AI world, I jokingly refer to it as dog years, because everything is moving so fast. So looking out for years, I do think we have reasonable visibility into 3 years. And for us, the goal is, and it's what we're doing already, scale construction, scale across geographies. And one of these is important. I know that like every interview I do, it feels like everyone wants to talk about AI bubble. And when you look at our company, the goal for us is over those next 3 years, build and deliver as much capacity as we can on long term. So we're signing 15-year plus contracts. That's typically 15 years plus renewals, long-term contracts with high quality companies as the counterparty. So, this just blows through the waves, bubble talk. We're really focused on not kind of what I would say is FOMOing ourselves into bad deals, because there's a ton of things that you can do out there right now because everybody's ready to do something. We're very focused on high quality counterparties, long-term contracts, and over those 3 years, building and delivering as much AI infrastructure capacity as we can possibly do in the US, and really being an integral player in the United States, winning in the AI race, our customers winning, and lowering costs and making things more efficient. We do a lot of work around design to create efficiency, because the generally in tech, if you look back in history, there's a cost curve in tech, and as tech gets adopted and get more widespread and bigger scale, costs come down. We want to be a leader in driving costs down for our customers, for AI functionality and AI applications to be much, much more widespread and more economical.
And I'm glad, you know what? I'm really glad that you said about the cost curve. And I think a lot of like new investors that are entering the space and looking at applied digital don't really understand the cost curve that it takes for you to keep building new campuses, keep acquiring new clients and doing these 15 years. And I think when you said that, that really like resonated with me because when you think about it, there's an up and down roller coaster, but your trajectory is still going up.
Yeah.
Am I correct?
It,
And
so Ken, if you look at our business right now, so just what we've contracted, and we've stated this goal publicly. Our goal is to get to $1 billion of net operating income, a standard data center industry metric, $1 billion of contracted net operating income with CoreWeave. We're over halfway there. So we're 500 million of contracted net operating income. If of us as a company, if we don't sign another contract over the next 18 months, you'll see our revenue ramp up significantly and our net operating income ramp up significantly as we bring just what we've contracted online. Now, we've already said that, we're in advanced stage negotiations for our Harwood campus. That'll get us, 75, 80% to where we're going. And then, we expect to have more in the future. So when we look at ours, it's get this locked in, and you just are going to see these, and it's going to come kind of a stair step function. So you saw our revenue up pretty significantly last quarter. We reported last week. We guided to another significant sequential increase in the current quarter, which is the November quarter. But you're going to see these big step ups because I just want everyone to remember that our business is, we spend a lot of money on CapEx to build these buildings, and then they turn on, and you get this big revenue jump up when they turn on. So it's not going to be linear; it's going to be stair steps for our business. But we have locked in that 500 plus million of NOI, and I think we're well on the way to our goal of that 5-year goal. That I think we can kind of significantly accelerate that 5-year goal. But that's the stated goal for us. And then where can we go beyond that? But it gives us tremendous visibility for a long period of time in our business, to have these long-term contracts with high quality off-takers.
yeah, that's why I mentioned that, and that's why I like what you said, because there's a lot of new investors coming in and they might not understand the business as well. And I want to make sure we get that down pat that yes, you're going to spend a lot of capital up front and the cost up front. But once the campus go online, once the client or the tenant moves in, and that's when the revenue starts to generate. And you can obviously see it in the I know you guys reported, recently, and you can see in those statements and those analyst reports that revenue starting to come in, but you guys are building more campus and expanding. So that comes up with my other question. How many campus do you guys think you guys will be able to do in like the next 3 to 4 years?
So when we just look at the two that we've talked about already, so our Ellendale campus, Polaris Forge 1, we have 400 megawatts under construction there. 100 megawatts starts to go live this month. And so we get back to kind of the stair step up in revenue and earnings. But that campus goes to right now a total of 1.4 gigawatts over time, over the next, call it 3 or 4 years, and it will take us that to build it as well. So you have 1.4 gigawatts at that campus. We've a little over a gigawatt. We think the expansion possibility is for Harwood. And then really every campus that we're looking at, what we're seeing from a demand perspective is the customers that are coming to us are, how fast can I get 200 megawatts? And I need it on a campus that can scale at least to a gigawatt. And so I've mentioned 2 others beyond that, that kind of easily folds into that 4 gigawatt. So
The Polaris one, and then you got Polaris
we got
2.
Polaris Forge 1, Polaris Forge 2, and then 2 others that we haven't talked about other than what I've said. So we haven't announced the name or the location of those sites.
You do have 2 others.
That's pretty
You
easy.
do have
4 gigawatts of active that we're developing.
So you have 2 other campus coming. I know you can't announce the names yet, but you have 2 other campus coming. So the question becomes, what is the formula like I understand you're based it on demand. That's kind of like the first main criteria.
Yep.
What is the thing that gets you to say, okay, we have the right location to build a campus, we have the right capital. What is the formula are you looking to get something done in a timely manner for a customer coming in?
Yeah, so we're constantly in conversations with those, all those hyperscalers I mentioned, and then we land on one where they're interested in that location, and then we start spending the time going through the due diligence. Hey, when is the power ready? When can we build? When can we turn on? And can we meet the same timeline? So we all have an agreement, and then we negotiate the economics, and then you negotiate a lot of stuff. I won't get into boring like SLAs and termination rights and all of these things. So you need, when we negotiate all of that, it's really around financing. And so you have to have really strong contracts to get really good financing because, so let's just go through the key ingredients here of doing this for us. So we have the site, location, land, fine. Supply chain, super important for us. We've landed with ABB and Basics for power and cooling, and we've really consolidated down to those really key suppliers. We've done some really interesting stuff around that for efficiency and dealing with load balancing, and we're really leading edge on cooling and on power. And so we have those, and then you need customer. Obviously, it has to come in on the customer side, and then you need capital. And let's talk about capital for a second. It's a capital-intensive business. And we announced last week the first funding of our $5 billion commitment from Macquarie. Macquarie, largest infrastructure investor in the world. They've been big in the data center world for a long time. We saw news break last week. The rumor is they're selling Aligned to a consortium led by BlackRock. And so Aligned is a big data center platform that Macquarie's built up, over the past 10 years, and they're exiting that at a really attractive multiple. And so now you have Macquarie in with us, and Macquarie knows what they're doing, and they have vetted us really well, and there's a reason that Macquarie's investing. But what's important here is that $5 billion is equity capital in the facilities. Equity capital. The equity capital, depending on the customer, needs to be about 20 to 30% of the capital that goes into a campus. The remainder you do, just like you would do your house, you do a mortgage or you do construction finance that then flips into a mortgage. So we're working with some of the biggest banks in the world on our first 2 buildings in Ellendale. We gave a big update on that on our earnings call. You should see that, fully announced in the next few weeks for that first one. And then the full capital picture comes together, where we have some of the largest capital providers in the world that have said, you know what, we like what Applied Digital's doing. We want to be in on this. And so that Macquarie $5 billion really unlocks 20 to 25 billion of capital for us to go and build. And here's the important piece of it. So Macquarie gets a small percentage of our data center subsidiary. What we have done over the past 18 months is we've sold stock in the market to finance what we're doing. We needed money to finance what we're doing. With the Macquarie agreement, this really puts the financing down at the asset level so that we can stop selling stock, stop diluting our shareholders, so that we can build these with big scale down at the asset level, and with the biggest capital sources in the world. But I think for us, that was a big milestone, because not only is it, Macquarie has experience here, the amount of diligence that we went through to get that investment from them was pretty intense. Same thing we go through with hyperscalers. We've been vetted again and again and again, debt, equity, customers, and what it's coming up with is you're going to see, I think, a platform, an industry-leading platform with a lot of growth ahead, with the key ingredients, the power, supply chain, customers, capital, right? Those are the 4 key ingredients for this.
And I definitely love it. So, as you build out this across then I'm assuming you're going to be building out across America, correct?
Correct.
As time move on, you're going to be building across America. You're planning on more data centers. I know you have 2 that you're not disclosed yet, but as a visionary, as a leader, I know somewhere in the back of your mind, there got to be a step to go internationally. You ain't got to say yes. I know that might be, but I know as a visionary, there might be some 5-year outlook to say, okay, I'm starting to get momentum here.
Yeah, so we've looked. I will say that we have looked international, but it's just 80+% is happening here. It's happening here in the U.S. and we want to be, like I said, that integral part in the United States winning the AI race. And so you see us go across different states. We absolutely have looked at opportunities international, but it's just overwhelmingly.
It's booming here. It's booming here. And that the only reason why I said that, because you're one of the companies that are frontiers.
Yeah.
So I just wouldn't be surprised if you're going to be the frontier that leads the race internationally, because once America starts doing it, kind of every country starts to follow suit. You know what I mean?
Yeah.
And then that leaves a lot of open doors for other countries to allow companies like yours who knows how to do it properly and knows what they need to get it done. And it's just a different environment. And that's it.
Yeah, it is, it's different on land and permitting and power and on those pieces. The building and operation, pretty much the same thing. Supply chain, same thing. Capital, same thing. So we have we spent some time. You shouldn't be shocked if we do some things internationally. I mean, there's a big push in the Middle East specifically. So in my opinion, right now you have 3 big areas pushing forward. There's a little bit going on in Europe, but it's not as much as it should be. We'd love to see more go on there, but China's pushing really hard. Middle East is pushing really hard, and the United States is pushing really hard. And so those are the areas, so we're focused primarily in the US, but we have looked at some things internationally, but those are kind of the markets I see pushing very aggressively, that have the vision of, AI is the future. We want to win, and they're creating the regulatory environment to win, and so we're operating within that regulatory environment.
We're getting close to the end, so I already know some of the major catalysts coming. We already spoke about this, but for the new people coming in that doesn't know who you are, that are buying the stock, what should you tell them that they should be expecting? Why should they stick it out the long term, like the old guys like me? A whole bunch of millions of people that's been in with you for $4. What do you say about the new people who are just seeing the stock, saying like, whoa, these guys they're frontier in the race? What would you say?
So the stock is what it is, right? The what drives shareholder value over time is business execution and results. And versus where we were in March, I would say that the platform as a company, we're much more de-risked. We have that large contract. Like I said, if we don't sign anything else, right, we have 500 million of plus of NOI to ramp into just with what's contracted now. But that gave us a lot of momentum. The market is really, the demand is extraordinarily high right now. We're very far down the path. Like we've said, in advanced stage negotiations with an investment grade hyperscaler for our initial capacity at Harwood. I think that gives us more momentum. Macquarie gives us more momentum, and we're inside the company, we're working really hard to capitalize on that momentum. But the company is becoming much more stable over time. But the way, Kenny, I would hope people would think about this is that there's, I think there's some really exciting announcements in the future, and that's great. But we're kind of moving to a place where, it's you got to move from a company of like, hey, you made announcements to you start printing these results, and as we go the next few quarters, like you're going to see building 1 come online, building 2 come online. You're going to see these stair step up in the financial results, because eventually, company value is driven by revenue and earnings and cash flow and execution, and we're hitting that stage. And people should think about us as that. It's great, yeah. We'll sign, hopefully we'll sign another big contract, but we're going to continue to do that. We're constantly in those negotiations. We are seeing, because of what we've created from a power perspective, which again, going back to everyone talks about power, we're seeing people show us power sites, because for the last 2 years, people ran around and tried to contract power and land. but then they don't know what to do with it. And so now we're seeing a flood of power sites come our way, and we're going to take the pick of those power sites and we're going to go develop those. So I've de-emphasized the power aspect because, not exaggerating, over the last couple of weeks, we've seen over 50 different new power sites that people have brought to us. We see them on a daily basis. Most of those are not worth pursuing, but some of them are. But we're seeing just an influx of power. Where I think we're even going to see some distressed power sites where people put applications in for power. Now they have to put real money up because their queue in line came up. They don't have the money to put up. They come to someone like us who knows how to execute, who knows how to go get a customer, who has the capital behind them to go and build that. So we're seeing all of those opportunities on top of the momentum we're seeing on the customer side and on the construction side in our business. So it's a really nice place where all of these things are coming together, and we're building a platform. And you're seeing these platforms, like for me, when I started, I'm looking at the platform players in the space, and three of them are, well, it looks like three will transact, so far this year, one of them very large, and the transactions in the private market are going off at 4% cap rates. So that's 25 times that NOI. And so, the stock does what it does to it on a daily basis. But me, and at the company, we're laser focused on building those long-term contracts, building that cash flow. And then we know what this platform is worth. Even if it fluctuates in the public market, we know what it's worth in the private market. We see those transactions.
Yeah, that's I wanted you to say all those things because a lot of new investors, they want the stock to move like crazy, but like you said in the past, everything takes time. Is about patience, and then eventually your results will end up showing on the stock market. And then for the new guys coming in, this has unbelievable amount of room. This company has unbelievable amount of room. This is just, I think they're at the infancy stages. They're doing great. So I'm going to end it on that note. Wes, I appreciate you coming on the show. Amazing from the first time, amazing the second time. I hope you keep doing your best, and I hope the company keeps growing at a tremendous rate. Looking forward to those two new sites open up, hearing about them. And as sites come online, man, I'll be cheering you on. Guys, thank you guys for listening. And Wes, if you have one more thing to say before we get off.
No, I appreciate you having me again. And like I said, we're here at the company working hard, executing. I don't ever really talk about the stock. I can't control what happens day to day, but we're here, busy executing and working to build long-term value.
That's what we like to hear. Thank you guys. This is Marathon Money Inside the Ticker. Peace.